DSCR loan costs. Hey, what's going on, everybody? It's Jeff Trevarthen, Jeff the Mortgage Bro. Thanks so much for watching today. I really appreciate it. Today, we're looking at DSCR loans, and in particular, the costs associated with these types of loans. So, I've been fortunate enough to be able to do a lot of these over the last couple of years. This is becoming my niche very quickly in doing mortgages across the United States, and DSCR loans are really fun to do. And what I love about them is that they are helping investors, people creating cash flow for themselves. And I think that's such a great thing to be able to do. So before I get into it, if you could do me a huge favor, if you could like my video down below, if you think that these videos are awesome, please go ahead and click on the like button. Thanks so much for doing that. And if you really, really like my stuff, go ahead and hit that subscribe button down below. And that'll let you know when these different videos are coming out. So hopefully you like this enough to be able to subscribe as well. So thanks for doing that. All right, let's get into the DSCR loan costs. There are several things associated with DSCR loans that I want to make sure that we touch on in this particular video here. The first one is interest rates. So when we do interest rates for conventional loans, for investment properties, they're on the higher end of the rate spectrum for conventional loans. They're going to be a lot higher than if you're going to do like a primary residence purchase with a conventional loan. But if you're going to do, DSCR loans, they're always going to be higher than those conventional loan rates are. So as an example, what I like to tell people is that you're usually going to be anywhere from 0.5% to 1.5% higher in rate on the DSCR loan versus a conventional investment property loan. So as an example, what do I mean by that? If your conventional investment property loan is going to be at 7.5%, you're going to have a DSCR loan anywhere from probably 8 to 9.5%. And a lot of things go into that rate in terms of your credit profile, prepayment penalties, all those different things, down payment. Those things all affect what the rate is. But for the most part, the DSCR loans are going to be higher in rate. So that's definitely a cost that we want to look out for when we're doing DSCR loans. The second thing is reserves. So usually when you're doing conventional loans for investment properties, you're also going to have reserves that you're going to have to pay, usually about 6 months. I think I've seen it as little as 3 months before on conventional investment property loans, but probably a minimum of 6 months reserves going forward. DSCR loans always are going to require reserves unless we're doing a cash out refinance. And in some instances, we can use the cash out for the reserves. But for the most part, if we're purchasing property or we're doing a rate and term refinance on these types of DSCR products, we're going to need to have reserves. Now, what is a reserve? Well, it's just 1 month worth of principal, interest, taxes, and insurance monthly payment. So oftentimes you're going to need anywhere at a very, very minimum of 3 months reserves. So if your principal, interest, taxes, and insurance monthly payment is $2,000, let's say, then you're going to need 6 months or 3 months worth of reserves is going to be $6,000. If you're going to need 6 months reserves, then you're going to need $12,000. But it doesn't need to be liquid. It doesn't need to be money that you have in a savings or checking account. It could be something like in a stock or a bond or IRA or 401k. Those things all count as reserves. It's not money that you need to put into the transaction per se. It's just money that we as lenders use as risk calculations to determine your credit worthiness as a borrower. It's kind of like a risk factor, I guess, that DSCR loans have with them. Other types of loans have reserves as well. Jumbo loans all have reserves. For the most part, investment properties on conventional loans have reserves. So it's not something that's uncommon in our industry. It's just something that helps us calculate risk to make sure that you're able to make the payment going forward. And then another cost that's associated with DSCR loans that is not, that I know of, on any other residential real estate loans is what's called a prepayment penalty. And what that means is the prepayment penalties can range anywhere from no prepayment penalty all the way up to a 5-year prepayment penalty is the biggest one that I've seen. Now, some states don't allow prepayment penalties. So if you're in a state that doesn't allow one, let's make sure that we check for that first. But that affects the cost of the loan. It's going to be a higher interest rate because there is no prepayment penalty. So the lenders are inherently going to give you a higher interest rate just because there's no prepayment penalty allowed in your particular state. So we have to take that into consideration. But the way that we can figure out, prepayment penalties and how they're going to affect the cost of the loan is if you go with a shorter amount of a prepayment penalty, so anywhere from 0, 1, or 2 years, it's probably going to be on the higher end of the rate spectrum. And, there's reasons why you may want to do that though, because if you think the interest rates are going to go down in that amount of time and you're going to be able to refinance to a lower interest rate, then it makes sense to pay the cost now and have a shorter term prepayment penalty. Whereas on the other end, if you're going to go with a longer prepayment penalty, anywhere from 3 to 5 years, you're probably going to be on the lower end of the rate spectrum. So that's something to be aware of when you're doing these DSCR loans. So what does a prepayment penalty look like? So let's say the standard is a 3-year prepayment penalty on the loan, and they have what's called a 3-2-1 prepayment penalty going forward. So let's say that what that means is if you refinance in the first year, 3% would be the penalty of the loan amount that's paid off. Second year would be 2% of the prepayment penalty that's paid off, and then in the third year it'd be 1% of the balance that was paid off. So, for example, if you had a $100,000 loan and you paid it off in year 2 of a 3-year prepayment penalty, your extra fee or cost for paying that off would be $2,000. That's 2% of a $100,000 loan amount. Okay, so that's definitely a cost that's associated with DSCR loans that is not associated with any other types of products. Okay, so rates, reserves, and prepayment penalties are costs associated with DSCR loans. And then just like all other types of loans, they also have like other costs associated with actually getting the loan. So the first one is going to be discount points. And discount points, remember, are so one discount point is equal to 1% of the loan amount. So if our loan amount is $100,000, 1% of that is going to be $1,000. So DSCR loans, depending on the loan amount, depending on lots of different types of factors like credit, down payment, equity position, all those different things play into the value, what the DSCR ratio is. Those can affect the amount of discount points that you have to pay on a transaction. So DSCR loans, usually what I see is anywhere from 1 to 4 points. That's also, compared to the loan amount as well. So if you have a lower loan amount, it's probably going to be more points. If you have a higher loan amount, it's going to be a little bit less in terms of points. So just something to keep in mind. Conventional loan investment properties mostly have discount points as well. So something to be aware of as a cost going forward. We're also going to have what's called an admin fee on DSCR loans. That's a broker fee of $6.95 for the current company that I work with. It's something that is just a fee that you have to pay. That's a broker fee. There's a processing fee that allows us to process the file for you. That's typically anywhere from $500 to $800 roughly, depending on who's processing your loan. You have underwriting fees. And so with DSCR loans, those can be somewhat expensive, especially on the bigger end of the loans here. So those range anywhere from, let's say, $1,000 to $2,000, just typically. And, to be like on the more expensive, more complex types of transactions, you're going to have a premium penalty is on the higher end of that, on that spectrum. Appraisal costs on DSCR loans, you're always going to have an appraisal, and that's also going to include a rental survey as well. Sometimes we need to do faster, so we have to charge a rush fee on those. And so appraisals can be anywhere from $500 to $1,500. If you're doing loan amounts that are over $1 million, oftentimes you're going to need 2 appraisals going forward. So, just factor that into the cost of doing a DSCR transaction when you're going forward. And then lastly, you're going to have title and escrow fees. These are going to vary tremendously by state and where you're at. Things like settlement fee, things like attorney fees, notary fees, title insurance. Those are all different factors that could play into what the cost of the title and escrow fees are. It's really hard to estimate those going forward, but just expect some costs from the title and escrow company as well that you're going to do for a DSCR loan. All right, so hopefully that gives you a pretty darn good idea of the different costs associated with doing a DSCR. If you guys have any questions at all about these types of loans, please feel free to reach out to me, and I would love to be the one that helps you out with this. I'm going to put my calendar link down below, and if it's something that you really want to talk to me about, let's have a conversation about doing a DSCR loan, and let's talk about the costs associated with doing that. Thanks so much for watching, and I will see you on the next show. Have a good one, guys. Bye.